Shares of Reddit have officially been priced at their IPO of $34 per share, giving the company a $6.5 billion market valuation. But does this stock deserve a spot in your portfolio? We're going to cover the company's moat, business model, financials, management team, valuation, risks, and more. So stick with me here. So Reddit's mission is to bring community, belonging, and empowerment to the world. It is a social networking platform that has hundreds of thousands of communities where users discuss a huge range of topics with each other. By the numbers, they have 73 million daily active users, 267 million weekly active users, over 100,000 active communities, and more than 16 billion total posts on their platform. Now, user growth here is a very important number to watch, and it has accelerated in the most recent quarters. The number of logged in daily average users grew 21% year over year, and the total actually grew 27%. This is an acceleration. It was relatively flat in the years leading up to that, so the company is growing more quickly recently. Now, that growth is being shared both in the US and in international markets, about 50-50 split between the two, but it is growing faster, slightly faster on a daily average user basis in the United States. Now, how does Reddit make money? Well, this is an advertising play right now. 98% of revenue comes from advertising. And when we dig into the details, acquiring advertising customers does cost a fair bit of money, and demand for advertising services does depend on the economy. So this is not recession-proof revenue. However, the vast majority of revenue here is recurring in nature. That is something to celebrate. Now, a key metric to watch for any social media company is this number: average revenue per user, ARPU. This came in at $3.42 in the most recent quarter. That was actually down 2% year over year. A good comparison to compare this company to is Pinterest. These are not apples to apples, but it's as close as we're going to get. Pinterest, by comparison, got $2 in average revenue per user during its most recent quarter. So Reddit is already being monetized at about a 75% higher rate per user. Now, if we dig into the details of that, Pinterest actually gets about $8, $8.07 per user in the US. That compares to $5.51 for Reddit user, so there could be upside there. The reason that Reddit is doing a better job has mostly related to the rest of the world. Reddit gets $1.34 in international markets. Pinterest only gets about 15 cents. So Reddit has done a much better job of monetizing its international user base when compared to Pinterest. Let's talk about the company's moat for a second. The number one moat here has got to be the network effect. The reason that people go to Reddit is because there's already so many high-quality users there, and that is a strong competitive advantage for the business. Switching costs for both users and for advertisers here are very low. You can always switch over to a different social media platform. There are some things like karma that you get from upvotes and downvotes that do attach to your account, so that could create some barriers to switching, but I don't think they're very strong. This is not a low-cost production company, especially when compared to Facebook and Google, but there is some brand value here. People that are on Reddit tend to be very hardcore users of Reddit and really love the brand. There's no counter positioning, and if I was to rate the moat here, I would say it is stable at worst, potentially getting stronger over time. Digging into the financials, we saw 21% revenue growth in 2023 to $804 million and an 86% gross margin, an outstanding gross margin here. However, the company is currently spending very heavily on sales and marketing, research and development, and overhead, so it's generating both an operating and net loss. Now, the share count should be about 148 million shares outstanding after the IPO takes place, and unfortunately, all the other profitability numbers are also very poor. Adjusted EBITDA is still a negative number. Free cash flow, negative 84 million. So this company is losing money even though it's been in business for 19 years. Now, that's the bad news. The good news here is the balance sheet is going to be in excellent shape. About $1.5 billion in cash, zero debt. All of that convertible stock is going to be converting into stock at the IPO price. So the balance sheet here, squeaky clean. Those losses can be funded for years to come. Turning to management. Reddit was founded 19 years ago by 3 co-founders. Only one of them is still with the business today. Steve Huffman's been there since the start, and he is the CEO. Disappointing to me was this company's employee review ratings were not that strong. Only 3.8 stars on Glassdoor.com, and only 2/3 of employees would recommend the company to a friend. So the leadership ratings here are not all that great. Meanwhile, inside ownership here is fairly low. Just 3.6% of the company is owned by insiders, or $234 million. Now, those insiders have much more voting control than inside ownership, but that is not nearly as much skin in the game as I would have hoped for. How about potential? Well, the biggest potential for this company in the near term is to continue to ramp its advertising, get more users, and monetize those users at a higher rate via ARPU. However, the company has also called out data licensing, taking its huge, massive data set that it has and selling those to other AI learning machines. It's already made a deal with Google, so this could be a business that develops into a meaningful revenue stream for the company in time. It is not there yet, though. Another avenue for growth is the user economy itself, allowing Reddit users to buy and sell products and services from each other's and collect them together, kind of like Fiverr does. Management believes this is another big opportunity, but it's not there yet. From an operating leverage perspective, a long way to go with bringing in operating leverage to this business. The company claims that its addressable market is $4 trillion. That is laughable number. It's nowhere close to that figure. However, this company hasn't even pulled in $1 billion, $800 million in total trailing 12-month sales. So if this business fails as an investment, it's not because the opportunity wasn't there. And one other thing to like about this business is all of the growth to date has been organic in nature. Now, we don't know how the company has performed over time. There's obviously going to be no buybacks, debt pay down, or dividends to speak of in the near future. Turning to risks. The number one risk here for investors is competition. Competition from other advertising avenues, such as Google and Meta. That's the biggest competition. That's the biggest risk, in my opinion. Dilution is another risk to watch. We do not know what the company's stock-based compensation practices are going to be once it comes public, so that will be something worth watching. This is a San Francisco-based company, and companies based in San Francisco tend to pay their employees very well with stock-based compensation, so dilution will be worth watching. Aside from that, the only outside force that we need to be wary of is just a general appetite for advertising. This is an advertising-based company, and the ad market over the last 12 months has been quite poor. It's gotten better recently, but that is an outside force that will impact this business results. Final risk to be aware of is the valuation of this business, and let's just dive deep into that. So thinking about Reddit's income statement, here's what we have. It's basically optimized for revenue and gross profit at this time. It is not optimized for any other metric. For that reason, where is it on the business growth cycle? It is very clear to me that this is in the phase 2, the hyper growth phase. When it comes to valuation, that does limit the number of tools that we can use. So let's do multiple analysis using price to sales and price to gross profit as rough proxies. So the stock IPO'd price at $34 per share. That gives it a $6.5 billion valuation. If we divide that by the trailing 12-month sales of $804 million, the price to sales ratio here is 8.1 times. If we do that same math and divide by gross profit instead of sales, we get 9.4x on a gross profit basis. How does that compare to the peers that are already out there? Well, let's compare them to Meta, to Pinterest, to Alphabet, to Snap, and to Match Group, which I've organized here by price to sales from high to low. So Reddit's 8.1x multiple at IPO price of $34 per share is below Meta's 9.5x multiple, but it is above Pinterest. So on a relative basis, on a price to sales basis, this is at the high end. How about on a gross profit basis? Well, because of this company's outstanding 86% gross margin, it's going to be trading at 9.4x gross profit. That's actually below Meta, Pinterest, and Alphabet. It is above Snap, though. So I would argue price to gross profit is a better metric than price to sales, and on a relative basis, this is cheaper than Pinterest and Alphabet. How about growth? Well, we only have 1 year revenue growth to go off of, but at 21%, Reddit would be at the top of the heap here. So on a price to gross profit basis, not that expensive on a relative basis, and yet it's growing faster on a revenue basis. So I don't think the out of the gate valuation here is anything extreme. In fact, if you can get in at $34 price, it's possible, not guaranteed, but possible that is a fairly good entry price. However, what should investors watch moving forward? To me, there's 4 key things. 1, user growth. This thesis hinges on continuing to grow the platform, so we want to see that number go higher. 2, average revenue per user. Reddit has to do a better job of monetizing its existing user base in addition to growing the pie. 3, culture. When a company goes from private to public, culture changes. We want to see that the company can maintain its internal culture and, just as importantly, its culture amongst its users. If there's a revolt on its users because they feel like they're being monetized higher, they will leave and they will complain, and that could hurt this business long term. 4th, valuation. The valuation out of the gate seems reasonable to me, high, but relatively reasonable, but that number will change drastically over time. One other parting thought: when Pinterest came public in 2019, I was personally a very big bull on it, but that company failed to make the transition to being a public company. Its CEO changed out, and it's really struggled. So this company has underperformed the market in general. I don't know if Reddit is going to have a similar fate, but based on that N of 1 here, Pinterest, the odds of this company underperforming really matter. So for me personally, I would not buy this company at the IPO, but I will track this business. And if the valuation improves and the company can prove to investors that it can outperform expectations, I might be interested. We hope that you enjoyed this review. If you want this channel to cover Reddit's earnings moving forward, give this video a like. That will signal to us that there is interest in us covering Pinterest stock. Thanks so much for watching. See you in 90 days on this one. Brian, out.